Welcome back to the CryptoBot channel, everyone. My name is Josh, and right now, while Bitcoin is still playing out this bullish divergence, we are seeing a massive recession signal officially confirmed on this chart right here, which has predicted every single recession in the United States for the last 3 to 4 decades. So I'll be talking about that in just a moment, alongside Ethereum still holding above this important Fibonacci level of support, while the price of Chainlink is coming in for another test of this critical area of resistance. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before we take a look at the Bitcoin charts today, we need to take a look at this chart right here, which is the 10-2 yield spread. So basically, in case you're new to all of this, this is the 10-year treasury yield minus the 2-year treasury yield. And so we're talking about US treasuries here. Basically, if you buy a government bond, for example, from the US government, you're effectively lending the US government your money, and in return, the US government pays you a coupon, basically a yield on that investment. And when everything is going to plan, when everything is normal how it actually should be, usually the longer you invest your money for, the longer you loan out your money for, the higher the interest rate you receive. And so that creates what's called a yield curve, where it's usually a line kind of like this. So on the short end, you're basically getting lower interest rates. If you buy, for example, a 1-year government bond, it might be a lower interest rate compared to if you're, for example, buying a 10-year government bond, you should be receiving a higher interest rate to actually be compensated for locking your money up for a longer period of time. And so that's known as a positive yield curve, when everything is normal, going how it should be. And all of this right here on this chart is when the yield curve is positive above 0, because this white line is at 0. And so once again, this is the 10-2 yield spread. So the 10-year yield minus the 2-year yield. So if it's positive, once again, that means you're getting more for locking up for a 10-year period compared to if you're locking up for a 2-year period. But some brief periods within history, this yield curve actually flips negative. And these periods in the market right here, these very brief periods within history, are basically when you can actually get a higher interest rate for short period lending, short-term lending, and the longer term interest rates are actually lower than the short-term interest rates. And that can actually cause some big problems for the banking system, because the entire banking system, pretty much in terms of retail banks, they effectively make money on a positive yield curve, because they basically take short-term deposits and then lend that money out over long periods of time in the form of home loans and things like that to actually make money on the difference between the interest rates. And so during these periods in the market, when the yield curve is negative or the spread is negative, basically that causes some big problems for the banking system. And usually the market only prices this yield curve or this yield spread in the negative when things are basically starting to get pretty bad. And so that's an explanation of what this chart actually is. But if we're looking at what the outcomes were of all of these signals right here on this 10-2 yield spread chart, this is on the monthly time frame, by the way. So each one of these candles is one entire month. And so this chart right here dates all the way back towards around 1988. So we're looking at around 30 to 40 years worth of price history on this chart right here. And if we're taking a look at the first time this signal flashed, at least on this chart right here, based on the current price history, we do have a negative signal right here in the yield curve or the yield spread. And then basically just after it flipped positive, we saw a recession in the United States. These red areas on the price chart, by the way, are the recessions that have been confirmed in the United States. And so as we could see, it flipped negative, and then roughly around a year later, from when it flipped positive, around a year later, it flipped positive basically around mid-1989, and then it was during 1990, we saw a recession in the United States, and then we saw something similar around the year 2000. It flipped negative during 2000, and then near the end of 2000, beginning of 2001, it flipped positive, and obviously what came next was a major recession. That was the burst of the dot-com bubble. And we did actually see a slight little false signal here. So it is worth pointing out that, of course, we did see at least one false signal in 1998. So obviously it was a couple years later, we ultimately saw a recession. It it wasn't actually right after that signal right there. But ultimately, obviously, when it flipped extremely negative during the year 2000, that's when we saw the major recession just following that signal. And then it flipped negative again during around 2006, 2007. And then when it flipped positive, that was right around the middle of 2007. And less than a year later, pretty much, we started the 2008 crisis, the massive recession, the Great Recession. And then what's very interesting is this signal actually flashed before COVID even hit and predicted the COVID recession before COVID was even a thing, which is very interesting. But we saw this signal confirm around September 2019, so just before 2020. And then, of course, during 2020, basically in the first half of 2020, with the global shutdown, we did indeed see just a minor recession there for a few months. But as we could see here, over the last couple of years, we have seen the largest signal we have ever seen in this yield spread indicator. Obviously, it flipped extremely negative over the last couple of years. It reached a low point right here around mid 2023. And only just recently, from around near the end of last year, it just flipped positive again. And it's usually after it flips positive again, it's usually not long after that happens, that is when the major recession hits. And now, once again, we did see one false signal in 1998. So obviously it took a few years after that to actually see the next recession. But just keep this in mind. Obviously, it's only one signal, one chart. So don't rely everything just based on this one chart by itself. But it's definitely something to consider, considering how accurate it has been over the last 3 to 4 decades. And so let's just say I would not be surprised if we do end up seeing some sort of recession or downturn in the US economy or financial markets in general, potentially at some point within the next 1 year or so. Because as we can see here, this is actually a signal that has already been building for years now, and it's only recently just flipped positive, recently just activated that signal right here near the end of 2024. But with that being said, if we're taking a look at the Bitcoin price chart today on the 4-day time frame, the super trend indicator is still sitting in the red. So not much has changed over the last 1 day on this chart. And if we're taking a look at this weekly Bitcoin chart, we're still technically seeing the bearish crossover playing out in the weekly Bitcoin MACD, as I've been saying every day for almost 2 months now. But as I've been saying more recently here on the channel, just over the last week, give or take, we are possibly approaching a low point in the histogram within the MACD indicator on the weekly Bitcoin price chart, which basically means we're potentially getting close towards confirming the maximum amount of bearish momentum within this bearish movement. So possibly, at least in this bearish movement right here, possibly the worst is behind us, but we still have to actually confirm that. But if we're taking a look at this weekly Bitcoin chart, we still have a significant bearish divergence on the weekly time frame that we cannot ignore, as I've been saying every day for around 2 to 3 months now. So once again, this means we should not be expecting any significant bullish momentum, at least anytime soon. So of course, we can see some short-term bullish price action, just not necessarily significant momentum towards the upside. And if you want to actually trade these moves in the price of Bitcoin or any other crypto, personally, I'm taking a lot of my crypto trades over on BTNX, so I'll make sure to leave a link to BTNX below this video in the description and in the pinned comment. And if you use that link, by the way, it'll take you to this sign up page where you can claim an exclusive 10% discount on all trading fees on the BTNX exchange forever. But that massive fee discount is only available if you use that link. And also, in case you're wondering, BTNX is a no KYC exchange, which means you can access it from basically any country in the world without needing any KYC. But as always, check your local regulations when it comes to trading crypto. And for whatever reason, if you don't want BTNX as an exchange, there's also 2bit as another exchange out there that I also use myself. So I'll also make sure to leave a link to 2bit below this video as well. And 2bit, by the way, is also a no KYC exchange as well. But with that being said, taking a look at this daily Bitcoin price chart, and right now we're still holding above this 38.2% Fibonacci level of support, sitting at around 82,500. So right now that is still acting as support. But if we break below around 82,500 and especially below 82,000, in that situation, the next retracement level of support is sitting at close to 76,000. And below that level of support, support, I'll be paying attention to this area sitting in between 70,000 to 74,000 based on previous significant resistance, flipping into new support, and also a lot of support at close to 70,000 based on the volume profile indicator. And as for resistance, obviously, at least in the short term, we're currently experiencing a bit of a rejection from this area of resistance sitting in between around 86,000 to 88,000. But if we can actually see a confirmed breakout with at least a candle close on the daily time frame, or ideally the 3-day time frame, confirming above 88,000 and holding that as support, in that situation, the next resistance I'll be watching is sitting at close to 92,000, and above that, more resistance at around 96,000. And if we're taking a look at this daily Bitcoin price chart, of course, we still have this active bullish divergence, which is still technically playing out, at least as of right now, because we've not yet confirmed any invalidation signal to invalidate this shorter term bullish divergence. So like I've been saying for over a week now, expect a slight bullish relief, or at the very least a bit of choppy sideways price action as the most likely outcomes, the most common outcomes from a bullish divergence. And usually a bullish divergence on the daily time frame plays out over a couple of weeks, give or take, before it starts to lose relevance. And so as of right now, it's been playing out for a little over 1 week, which means it'll likely play out for at least a little longer here in the short term. And if we're taking a look at this 4-hour Bitcoin price chart, while that bullish divergence is playing out on the daily time frame, we're currently forming an ascending parallel channel, which at least on the 4-hour time frame in the immediate short term here is technically a bullish trend. We are forming higher lows and higher highs, at least on this time frame right here. And right now, the support line for this ascending parallel channel is sitting at roughly around 82.6k, and the line of resistance is sitting at close to 88,000. And we also have this center line for the parallel channel, which could act as a bit of resistance considering the current price is below that line, and that is sitting at around 85.4k, but also expect some resistance at close to 85,000 based on previous horizontal resistance. And if we're taking a quick look at the Bitcoin liquidation heat map, we still have a lot of liquidity in between around 71,000 to 74,000, and also more liquidity at around 100,000. So honestly, not a lot has changed over the last few days on this Bitcoin price chart right here. And with that being said, if we're taking a look at Ethereum on the weekly time frame, right now the larger price structure is technically still bearish, as I've been saying. Basically, from the moment we broke below this massive multi-year line of support, that was a major bearish signal for the larger price structure. But if we're taking a look at the 3-day time frame, we're still holding above this Fibonacci level of support, sitting at around 1870 to 1880. So at least for now, we still have a lot of support around there, at least in the short term. But if we start confirming a break towards the downside below that level, and especially if we fail to get back above that level and we actually reject from that level, flipping it into new resistance, for example, then in that situation, the next important level of support towards the downside, the next major price target, would be sitting at just above 1.5k. And as for resistance to watch out for, I'll mainly be paying attention to around 2.1k to 2.2k as significant resistance based on this previous golden pocket area of support flipping into new resistance. And if we're zooming further into the short term, taking a look at the 4-hour time frame, we also have this line of support to watch out for based on previous resistance flipping into new support, and that's sitting at around 1930 to 1940, give or take. So if we see another little pullback here, expect support around there. And below that level, we also have this ascending line of support sitting at close to 1.9k. And just in the immediate short term here, talking about a matter of hours or days, possibly 1 or 2 weeks, but that sort of time frame, just basically a period of days. Technically, the short-term price structure is currently bullish, as we have broken out above this previous line of resistance and flipped it into new support. So once again, just talking about a period of days from now, technically we're looking slightly more bullish than we are bearish. But when we're zooming out, looking at the bigger picture on the weekly time frame, it's the exact opposite. We're simply just seeing a short-term relief during a larger bearish trend, at least as of right now. That is the current situation. And if we're taking a look at the price of Solana on the weekly time frame, Solana is still hanging into this area of support, sitting in between 120 to 130. So we're still holding that as support. And as for the daily time frame, we're still playing out this bullish divergence, which means we're likely going to see either a slight bullish relief or just some choppy sideways price action as the most likely outcomes from a bullish divergence. And so far, this has been playing out pretty much perfectly for just over a week now. And like I said earlier in the video, and as I've said many times here on the channel, usually a bullish divergence on the daily time frame plays out over a couple of weeks, give or take. So basically it is likely we could continue to play out this bullish divergence for at least the coming days. But honestly, not much else has changed here for Solana over the last 1 to 2 days. So getting straight into the price of XRP on the 3-day time frame, and right now this larger bearish divergence is technically still active. So once again, not a lot has changed on this chart for XRP over the last 1 day. But if we're taking a look at this 8-hour time frame, looking at the shorter term, at least for now, the price of XRP is still holding above this short-term area of support, sitting in between around $2.24 to $2.30, and we also have more support in between around $1.95 to $2.05. And as for resistance, we have a lot of resistance at just above 260, around 265 to 280 in that price range based on previous resistance, and also more resistance at around $3. And at least as of right now, in the immediate short term, the price of XRP is simply lacking momentum to either direction. As I've already been saying recently here on the channel, the price is basically just bouncing around within a sideways price range between support and resistance. So we're not looking overly bullish or overly bearish, at least in the shorter term for the price of XRP. And so honestly, not a lot has changed over the last 1 day in that regard. So getting straight into the price of Chainlink on the daily time frame, and right now Chainlink is possibly about to come in for another test of this area of resistance based on previous support flipping into new resistance, and that's sitting at around $14.90 to $15.50. So at roughly $15 give or take, that is major resistance to pay attention to. And of course, the bullish divergence on the daily Chainlink chart is technically still active, with lower lows confirmed in the price and higher lows confirmed in the RSI. We've not yet confirmed any invalidation signal to invalidate the bullish divergence, which means we're still likely going to see either a slight bullish relief or just some choppy sideways price action as the most likely outcomes. But as I've been saying recently here on the channel, with the bullish divergence playing out at the same time as the price running into major resistance, it is quite likely we could play out a bit of choppy sideways price action in the coming days as the price tries to play out the bullish divergence, a bullish relief, but then it rejects from resistance and basically repeats that a few times. But if we can finally see a confirmed breakout with at least a solid daily candle close above around $15.50, then in that situation, the next major point of resistance I'll be watching, the next short-term price target, would be sitting at around $17.50 approximately, based on this previous 50% retracement level of support acting as new resistance. And in that situation, that could possibly be very bullish for the price of Chainlink, because we could possibly be forming an inverse head and shoulders pattern here if, of course, we first break out above the golden pocket and then see a rejection, for example, from around $17.50, come back and then form a right shoulder. Obviously, we still have a long way to go to possibly form an inverse head and shoulders pattern, but the first step would be at least seeing a breakout above this golden pocket, above around $15.50. But at least for now, while we've not yet confirmed that breakout above this resistance, technically the larger price structure or the larger trend is still currently bearish, as I've been saying for months now on the channel, since much higher prices for the price of Chainlink. And as for support, we still have a lot of support at around $12.70 to $12.80. And once again, if you want to trade any of these moves in the price of any crypto, check out the links below this video to those exchanges if you want to claim those massive bonuses that are only available using those links. And if you want to actually know how to trade crypto for yourself, no matter what the price is doing, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.